Good day, ladies and gentlemen, and again out of Munich here, out of our commodity TV studios. With me here today is South American Ferro Metals, a great iron ore producer out of Brazil. And with me here is also Doyle, and he's the executive director of the company. He wants to give us a bit of an update what happened in the last 9 months, as we spoke the last time in December in London in Mines and Money. And Alan, glad to have you here. Thank you very much for taking the time.
Thank you very much for having me along.
Yeah, definitely. Well, you are an iron ore producer. You just released some very good numbers. You are profitable. And so what happened in the last 9 months? What was the progress in the company?
We've been working very diligently on our project. I think a lot of people treat us strictly as an iron ore producer, whereas we got into the project on the basis that it was a very big reserve. Currently our JORC number is 301 million tonnes, open pittable. Mm-hmm. And that can support a fairly large operation. Now, the thing that I think has distracted a lot of people was simply that we were in production as well, which is not a negative. We've been in production 1.5 million tonnes of ROM per year, and that has been profitable for us. It's been profitable to the extent that it has provided us with all of the cash we've needed for our feasibility study. Mm-hmm. Early on in the year, we also commissioned our first concentrator. Prior to that, we were just producing centre and small lump, mm-hmm, and stockpiling our fines. But now, with the installation of our concentrator, which came on stream in February, we started producing a high-grade product, and the high-grade product obviously has a much better price. Mm-hmm. So that
and better to sell, maybe also.
Much easier to sell. So that gave us another string to our bow, and what that also did was it provided more money in order to get another concentrator, mm-hmm, which is now fully operational. We had a period of probably 8 weeks of bad production where we're trying to synchronise everything, mm-hmm, but that and too much water, too many rains, we're past that now, and that additional production again is very cash flow positive for us. That provides enough money for us to continue on, mm-hmm, and not have to go back to the market, mm-hmm, because there's enough money in the can to do complete our feasibility study. Mm-hmm. That, coupled with a loan that Deutsche Bank recently signed off on, has given us enough money to complete everything we need to do.
You've put on Deutsche Bank, I think it was in August or something, with $15 million loan, right?
We drew the money down, uh-huh, about 8 weeks ago,
mm-hmm,
and we're using that money principally to buy an additional 100 hectares just to the south of our project, which, mm-hmm, will be our main dumping area. That's about the only money we need at the moment. Mm-hmm. We're still very lucrative in the bank. There's a lot of cash in the bank at the moment, and we are now cash flow very positive now that both concentrators are up and running after a maintenance shutdown of about 6 or 7 days just recently. Mm-hmm. So we are in very good shape.
Mm-hmm. Very good. It's always good to hear the company in the resource world is in good shape.
Yeah.
So can you say anything about the last production figures already? Because I think with the new concentrators on stream, I think you should significantly increase production for the future, right?
Yeah, our licence at the moment is 1.5 million tonnes of ROM.
By the way, what means ROM?
ROM is the ore that you actually mine.
Mm-hmm. So the material that comes out? The
material that comes out of the, mm-hmm, ground and goes into the plant.
Okay.
That's referred to as ROM. We're producing good quality grade in sinter, small lump, and now concentrate, two, mm-hmm, concentrates, concentrate 1 and 2. The concentrates are 64-65%, which is very good grade. And that's all a very saleable product. We're looking now at about 80,000 tonne, 60 to 80,000 tonne per month, mm-hmm, of material that we'll be selling, mm-hmm, which is just shy of a million tonnes, mm-hmm, per year, which seems high, accounting for our head grade of sort of just over 50%. Mm-hmm. But we're also putting some of our previous processed fines through the plant as well, which is a reasonable grade.
Mm-hmm. Can you say something about your all-in production costs? Is that because now you have more output, you have installed your new concentrators? I think maybe they are moving down the costs?
Yeah, with this plant that we're operating at the moment, and we want to make sure people don't get too distracted, mm-hmm, with the small picture. We're producing at just under $20 a tonne, mm-hmm, and our sale price weighted average is probably $40, $45 a tonne. and 80,000 tonne a month. You can work the numbers out yourself. And most of that cash has gone straight back into building concentrators and doing feasibility studies and drilling our resource up.
Okay, then come to the future. Feasibility study should be finished by year end, I guess.
Yeah.
And you want to expand to 8 million tonnes per annum ROM, right?
Yeah, the future is what excites me about the situation. We have cash coming out of the ground at the moment, which is effectively a pilot plant, so we know everything there is to know about the ore body. There'll be no surprises. So it's a good thing that we have been in this production. Our first stage upgrade is our licence will be an 8 million tonne licence, and we expect that licence to be hopefully granted by the end of the year. That's our anticipation. Feasibility study would probably coincide with the granting of the licence at the end of the year, maybe first quarter next year. 8 million tonne a year, with the major product being a concentrate, only one product, concentrate at 65% iron, which is good quality, but the other good thing about it is there's virtually no phosphorus.
So low impurities?
Very low impurities.
Wow.
So it's very good quality ore. And it will all be from an open pit. And as I say, 300 million tonnes as the first stage of the ore body now it's a big ore body.
That means you can do the next 40, 50 years if you want.
Well, there is a second stage upgrade planned from the 8 million tonne to 16 million tonnes. And that again is well within the boundaries of the proposed pit. And that will be producing probably somewhere of the order of 8 million tonnes of concentrate for the pellet market annually.
How do you want to finance the whole stuff? Because I guess a plant size like this should be something like between $200 and $300 million.
Yeah.
Right.
Yeah, that's the number that we're working with at the moment. Our engineers haven't provided us with a final cost, obviously, but the talk is $200 to $250 million for the plant. It's nothing complicated. It's a screening plant and a washing plant and concentrators. That's all it is. It's a very simple operation. Dig it up, put it in, wash it and sell it. That's the plan. The financing of it is interesting. Management of the company owns the majority share. I mean, put all the management together and there's probably 40% of the stock under management control, which is seen as a good thing. It also means that we're not that enthusiastic about diluting the rest of the shareholders.
That's very good to hear, yeah.
And financing opportunities are available to us. Deutsche Bank have obviously done their due diligence on us, and they're interested in assisting us with further funding. There is another major European bank that has also put its hat in the ring and signed an NDA with us to do all the work. We've had 2 Chinese companies interested in becoming involved in the project. We've had an Australian iron ore company wanting to be involved in helping us fund it. And we've had a couple of stockbrokers looking to issue some sort of bond on the project, which is attractive to us because we have cash flow to support the coupon. So
what's about the large trading houses in the world?
There is an opportunity with us to do a transaction with one of the major trading houses on a basis where they would take the offtake. They would provide us with some forward positions sales, which is also attractive, and do any one of a number of other tricky synthetics that they could sell on the market that I don't think...
Non-dilutive, of course.
Everything would be non-dilutive because I think that's the major thing for the shareholders.
Yeah, and you are the largest shareholder,
and
so it's all in your interest.
Yeah, and if there's any way we can use our brains to facilitate more money to the shareholders, then we will. And ultimately, dividend-paying companies is the sort of thing that we're interested in growing to.
I really like to hear that, because I think this is also more the future in the resources sector, to get out dividends to make shareholders happy. Yeah,
we have a very non-complicated business. People talk about the Chinese market stopping all the time, but effectively the iron ore price has done nothing but go upwards. Apart from one blip about 12 months ago, it's been consistent. It hasn't been out of control, it's just been consistent. And if you can provide consistent quality, consistent numbers, then the business is very straightforward.
How do you see by yourself the drop in your share price? Because it looks to me like that you are a bit a victim of this financial crisis, of this downturn trend in the resource sector, because you did obviously everything right. You are profitable. You have a PE of something like 10, 11 after tax, I would say. And so it seems to me a little bit astonishing that your share price is like 5.5 Aussie cent.
I think there's a misconception in the marketplace that our abilities to get this project through to fruition isn't there, whereas it's something that we've had experience in the past. We did a 3 billion rand project in South Africa recently, which was very successful. We have the experience of a big project, although this is not a big project, and it's. I continue to emphasise it's straightforward. There's nothing complicated about digging something up, screening it and washing it. Infrastructure is available to us. We're in negotiations with the rail company and with the port company, and that infrastructure means that we don't need to spend a lot of capital.
So that's also all there?
That's all there. We're just south of a town called Belo Horizonte, which has about 5 million people. It's the major iron ore producing town in Brazil. We have Vale as our neighbour. Infrastructure is all around us. Main roads, rail, port access is available to us. And generally speaking, we are very confident that we'll get there, but the market itself, it's probably a function of the fact that the small end of the market in Australia is almost non-existent in terms of shareholding, new shareholders. People are interested in taking placements in us, but that doesn't help the shareholders. I think the fact we do have cash, we are profitable and moving down the track very steadily at a successful feasibility study to go into production of 8 million tonnes should mean that the market listens to us. But again, it's like talking to a brick wall. In Australia at the moment, there's no interest at the small end, and the market being the market, one needs to spread the wings a little bit wider and look for investors that are a little bit more attuned to the bigger picture and the longer term.
Final question: Brazil. How is it to work these days there? How is it with the authorities, with the tax regime, and also with the people there? Well, we saw some funny pictures in the media with riots and whatever. They were protesting against bribing and whatever. So what's the situation in the country?
I was in Brazil at the time. I'm over there very regularly. I was in there amidst all the riots that didn't really exist. I think the riots were perpetuated by the international media on a very, very small section of what were very genuine protests from effectively the middle class, the new middle class in Brazil. And the effectiveness has been acknowledged already by the government. I think they were simply looking at dampening down levels of corruption and perhaps utilising some of that money that could have been spent better on health and education. And that's what it was about. The riots were non-existent. They were just criminal gangs breaking into shops and stealing things. It got very bad press, but effectively Brazil is a good place to do business. As a corporate, you always complain about the taxes. I mean, you're never happy with the tax situation, so it's no better or no worse than anywhere else in the world. It's been relatively straightforward for us to deal. In fact, our company won the Environmental Company of the Year last year. So we are best practice environmental company, and that's a good thing for us. The government in Brazil, I mean, is like all governments, they like to tax and the corporates complain, but it's stable. I think it's a good government. I think with the World Cup soccer, the Olympics coming up, growth and stability is effectively assured there for quite some time.
Perfect. Thank you very much, Alan.
Thank you.
We wish you all the best and on your path, and we hope to hear soon from you. Successful feasibility study, and then get the financing and ramp it up, I would say.
Thank you.
Thank you, Alan. Yeah, ladies and gentlemen, that was Alan Doyle, the Executive Director of South American Ferro Metals. You heard it, they already produce roughly 1 million ton iron ore per annum. They will upgrade this in the next, maybe 18 months to 8 million tons per annum, and it looks like financing is available, so that's a comfortable problem they have, because a lot of groups are searching to do that for them. And watch out for the stock. It's unbelievable cheap, and we did our due diligence too, and we couldn't find anything. So watch out for it. Thanks for watching Commodity Tea. Bye bye.